All right, so we're going to tackle something pretty big today, $18 trillion. It's a massive number, and it's the reality of the U.S. consumer debt crisis that we're going to dive into.
Right,
And, I mean, it's not just numbers on a screen.
right.
This is hitting close to home for everyone.
Yeah.
I mean, the average household is carrying around $12,000 in credit card debt, and those interest rates are going through the roof.
Yeah.
24% APR?
It's really a tough situation, and what's even more concerning is that, this isn't just some kind of distant economic event.
Yeah,
It's playing out like when you go to the grocery store.
right.
Remember when the CEO of Walmart was talking about how shoppers were switching to cheaper alternatives?
Right, like ramen noodles instead of cereal.
Yeah, exactly. That's a real sign of the times.
Yeah.
And it speaks to just this broader trend of consumers, having to tighten their belts.
Yeah, it's a ripple effect for sure.
Yeah.
And it starts with those everyday choices, and it expands outward, and then it impacts, entire sectors of the economy.
Exactly.
Like, look at those auto loan defaults. They're up by 200%.
Yeah.
And then you've got, like, 45 million Americans who are now facing the return of student loan payments.
Right.
I mean, that's adding an average of $400 a month to their expenses.
Yeah, that's a huge burden.
It's like a chain reaction, and it really feels like the dominoes are starting to fall.
Yeah, I think to really get a grasp on how serious this is, we need to look at, what's causing it.
Yeah, what are the root causes here?
So our source points to three key factors that have kind of come together to create this perfect storm of debt. And I think it's worth looking into each of them.
All right, so what's the first one?
Well, let's start with what some economists are calling the Fed's higher for longer mistake.
Okay, higher for longer. Break that down for me.
Basically, they waited too long to cut interest rates.
Oh, they were slow to react.
Right. And because of that, credit card interest rates just jumped up dramatically.
Oh, wow.
I mean, they went from 16%, which was manageable, to a painful 24% in just 18 months.
Yeah, that's a huge fund.
So imagine trying to pay off your credit card with, that extra 8% in interest.
Like an uphill battle.
Exactly. It's like trying to run up a down escalator.
Yeah, and speaking of hidden obstacles, what about this shadow debt situation? That sounds kind of ominous.
Well, it is. But now pay later programs have become really popular.
Yeah, for sure.
But they've created this kind of hidden mountain of debt. We're talking $200 billion in loans.
Wow.
And the thing is, these loans often don't even show up on your credit report.
Oh, so people might not even realize how much they actually owe.
Exactly. It's like a ticking time bomb.
Yeah, especially for people who, rely on those credit reports to kind of, figure out, how they're doing financially.
Right.
Like a debt they don't even know they have.
Exactly. And then on top of that, you have the student loan payments coming back.
Right.
So millions of borrowers are now facing this like extra $400 a month burden, which is, really squeezing their budgets and impacting their ability to just participate in the economy.
So we've got these three major forces: the Fed's delayed response, this rise of this kind of hidden shadow debt,
Right.
and the return of these student loan payments.
Right.
And it sounds like, they're creating a pretty precarious situation for the average person, on Main Street.
Right.
But here's where things get kind of interesting.
Okay.
Wall Street seems to be playing a different game altogether.
Yeah, that's a great observation.
Like, while everyone's, trying to make ends meet, hedge funds are kind of like strategically positioning themselves for what looks like, a potential economic downturn.
Yeah.
Like, they're betting against certain companies, particularly those that rely on consumer spending.
Yeah.
So they're essentially wagering that those companies are going to lose value as the economy weakens.
Yeah, exactly. It's called shorting.
Okay.
It's a pretty common tactic that hedge funds use to profit during these downturns.
Gotcha.
And they're also building up their cash reserves so they have more flexibility to buy assets at a discount if the market takes a dip.
So it's almost like they're preparing for a fire sale.
In a way, yeah.
Yeah, it's like they have this crystal ball and they can see what's coming.
Right.
That's a little unsettling. But if they're, battening down the hatches and preparing for, tough times,
Right.
shouldn't we be doing the same?
Yeah, absolutely. And, the good news is that you don't have to be some Wall Street insider to kind of adopt some of these strategies.
Yeah. Right.
It's all about, understanding the trends and positioning yourself in the right way.
Okay, so let's get into some strategy here.
All right.
What are some things that, everyday investors can do to kind of weather this potential storm?
Well, there's this interesting insight that came from Morgan Stanley analyst Lisa Shella.
Okay.
She's noticed this big jump in sin stocks.
Sin stocks, like what?
Yeah, so companies that make alcohol or tobacco, discount goods, that kind of thing.
So the idea is that even if the economy is doing bad, people still want their vices and bargains.
Exactly. Those industries tend to kind of hold up well, even during recessions.
Yeah, that makes sense.
Because, people are still looking for affordable ways to indulge or, just make ends meet.
Right. So how can someone actually invest in this trend?
Well, you could look into something like a discount retail ETF like XLP
Okay.
that tracks companies like Walmart and Dollar General.
Okay.
Both of those are doing pretty well right now as, shoppers get more price conscious.
That's a good option for people who are comfortable with the stock market.
Uh,
But are there, other strategies that might be, a little less risky?
yeah, definitely. I mean, let's talk about debt collection agencies. Now,
Okay.
this might sound kind of strange,
Uh-huh.
but companies like Encore Capital, they actually specialize in buying up these like defaulted loans
Okay.
for pennies on the dollar.
Wow.
And as more people struggle, their business actually, starts to do really well.
So it's kind of like, finding opportunity in a tough situation.
Exactly. It's about recognizing that the economy, goes through the cycles
Mm-hmm.
and identifying those opportunities where you can protect and maybe even grow your wealth.
I like that. And what about traditional safe haven assets like gold and silver?
Yeah, you're thinking along the right lines. Precious metals are historically a good hedge against economic uncertainty.
Okay.
And we're seeing that happen right now. Gold and silver prices are going up as
Right.
people lose a little bit of trust in the dollar.
Okay, so we've got some options for people who are looking to invest.
Right.
But let's shift gear a little bit
Okay.
and talk about the, you know, millions of people who are already feeling trapped by debt.
Right.
What can they do right now in this, current crisis?
Well, the key is to be proactive. So, first and foremost, I would really urge anyone to look into refinancing options.
Okay.
Credit unions are offering balance transfers at a much lower interest rates than the big banks.
Okay.
We're talking, 15% APR compared to 24%.
Yeah, that's a huge difference.
It can make a big difference in your monthly payments.
Definitely. But even with, lower payments, the amount of debt can just feel overwhelming.
Right.
Do you have any advice for kind of dealing with that mental and emotional side of it?
Yeah, absolutely. There's a strategy called the snowball hack that I think is really helpful.
All right.
The idea is that you focus on paying off your smallest debts first,
Okay.
no matter what the interest rate is.
Okay.
And that kind of creates this sense of momentum and accomplishment.
Like you're checking things off a list.
Exactly. It's really motivating and it helps you, work your way up to those bigger debts.
I like that. And while we're on the topic of taking control,
Mm-hmm.
it's important to remember that there are ways to increase your income too.
Right.
The gig economy is booming right now.
Absolutely.
Platforms like, TaskRabbit and Upwork make it easier than ever to kind of earn extra money,
Mm-hmm.
often, tax-free.
Right.
So whether it's, freelancing or pet sitting or running errands,
Yeah.
there are all sorts of opportunities out there to, bring in some extra cash.
Right. And kind of create that financial breathing room.
Exactly. And speaking of opportunities,
Right.
it's also important to be aware of the potential pitfalls out there.
Right.
Unfortunately, there are people who try to take advantage of, folks who are feeling financially anxious.
Yeah, absolutely.
Those companies that promise these quick fixes and easy solutions.
Right, like debt settlement firms,
Yeah.
they often make these big promises, but they can actually do more harm than good.
Right.
A lot of their clients end up with, worse credit scores.
So you really need to do your research.
Yeah, be careful of anyone who's, promising you something that sounds too good to be true.
Exactly. And when it comes to credit repair,
Mm-hmm.
you can actually dispute errors on your credit report yourself for free.
Yeah, that's right.
You don't need to pay someone to do that.
Exactly.
It's all about being informed and taking control.
Right.
This has been incredibly eye-opening.
Yeah.
But I think what's really striking is this contrast between how, Main Street and Wall Street are approaching this.
Yeah, I agree. It's like they're looking at the same situation through two totally different lenses.
Yeah.
On the one hand, you have people who are, struggling with these rising costs and this growing debt.
Right.
And then on the other hand, you have these hedge funds who are getting ready for, they think is going to be a fire sale.
Right.
And, ready to kind of capitalize on that.
It feels like they're playing a different game.
Yeah, in a way they are, but, it's not about pointing fingers or blaming anyone.
Right.
It's about understanding how this all works
Yeah.
and, learning how to kind of navigate it strategically.
So what's the takeaway here for our listeners?
Yeah, what can they, take away from this conversation and apply to their own lives?
Yeah, it feels like we're kind of at a crossroads. We can either panic or we can use this knowledge to our advantage.
Yeah, I think that's the key takeaway here. If these hedge funds are basically, betting on this big economic shift, like a reset,
Yeah,
it makes you wonder, what can you do to get ready for that?
right.
Are there things you can, buy at a discount or, skills you can learn
Yeah.
to be more competitive, in the job market if things change?
Yeah, it's like flipping the script.
Mm-hmm.
Instead of feeling helpless, we can take control
Exactly.
and use this information to make, smarter decisions
Right.
and maybe even come out ahead.
I think that's the key.
Yeah.
Knowledge is power, especially when you're talking about the economy.
Yeah.
The more you understand, you know how things work, the better prepared you'll be to make good decisions.
This deep dive has been a real wake-up call, but also incredibly empowering. We went from this scary $18 trillion debt crisis
Mm-hmm.
to, actual strategies for not just surviving, but potentially thriving.
Right.
So what's the most important thing you want our listeners to remember today?
I want them to know that debt isn't a life sentence. It's tough for sure,
Yeah.
but it's something you can overcome, with the right attitude, the right tools, and the right help.
Yeah.
Don't be afraid to look for information and ask questions.
Right.
You have the power to take control of your finances.
That's a fantastic message to end on. Thanks for joining us for this deep dive into the debt crisis.
Yeah, thanks for having me.
And remember, this is just the beginning of the conversation, so keep exploring the resources that we talked about, do your own research, and most importantly, take action. Until next time, stay informed, stay empowered, and keep diving deep.